Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. Today's date is July 29, 2024. This is a Forex quick look. I'm going to take a look at two major currency pairs, the Aussie versus US dollar and the New Zealand versus US dollar, to get your week started in those currency pairs. Let's get started. I'm looking at the 4-hour chart, and you can see the price action has been more to the downside here after consolidating the Asian session. We are trading to new session lows as we enter into the U.S. session, and in the process, we're moving closer to the 61.8% retracement, another move up from the April low to the high price that we saw in the month of June. Getting below that 61.8% retracement will open the door for further downside momentum. Admittedly, last week we did move below that level in the extreme, but then bounced back higher into Friday and closed well, still lower on the day. I mean, it was a huge move to the downside here in the Aussie versus US dollar. And but we did close off those lows. Now, in last week's trading, we did move below some key levels, including the 100-day moving average. That's this blue line, and the green line represents the 200-day moving average. And those levels, along with the retracement and this swing area, is going to be key resistance on the top side. And you can see in trading here today, the high price today still pretty ahead of the low of that cluster of well, at least the 50% and 200-day moving average. It would take a move above both those levels and the swing area to increase the bullish bias, and then we'll start to look at the 100-day moving average. But the sellers are still in control, and getting below 61.8% retracement would open the door to the downside. Let's take a quick look at the hourly chart, see if there's any clues off of it. And if you take a look at the hourly chart, the high price in trading here today, smelled or sniffed the falling 100-hour moving average. That 100-hour moving average is now below all this, the 200-day moving average of 50% retracement and swing area. So it's going to be the first level that if we get above, it'll increase the bullish bias out, at least in the short term for the Aussie versus US dollar. Price has to stay above that level and then get above these other levels up here to increase the bullish bias. But it would be a step in the bullish direction. But as you can see, we're moving away from that level toward the 61.8% retracement. Let's take a look at the New Zealand versus US dollar next in the 4-hour chart. We are moving to new session lows, like the Aussie versus US dollar. The move to the pair moved sharply to the downside. Unlike the Aussie versus US dollar, the bounce back here was very limited. Okay, very limited bounce back from this move to the downside on Friday and into today. We stayed below the high of the bounce back on Friday and stayed within this swing area through here as well, up to 0.5901. So staying below the 0.59000 level is going to be the first clue to the bullish or bearish bias. If the price can get back above that level in trading either intraday or for an extended period of time going forward this week, that would give the buyers a little bit more confidence. But if we stay below that level, guess what? The sellers are still in control. We have moved below this low right here, and now we're working toward other lows for the week, for going back in time to April. As a matter of fact, those levels come in 0.5859 and 0.58516. Move below those levels, and where do we look at? Well, we're looking toward the extremes going back to October 2023, which took the price all the way down to 0.57723. So be aware of that longer term view. Finally, let's take a look at the hourly chart in this currency pair to see if there's any clues from it. And if we go to the hourly chart right here and take a look at where it stands versus the falling 100-hour moving average, we're still quite a ways away from that moving average. Haven't really been close to it since we started this rotation, further move to the downside right here back in July. So a couple weeks ago, we broke below the 100-day moving average at that time and other key levels, and it's been down since that time for the New Zealand versus US dollar. So both the Aussie and the New Zealand versus US dollar are moving to the downside in trading and staying below the 100-hour moving average, staying below other levels on the top side, keeping the bias to the downside for these two currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.